I want to come back to SPACs, guys. This theme that I hit on yesterday, these enormous amount of shares being redeemed on deals that are closing. In other words, shareholders vote in favor, but more of the shareholders than not also say, I'm out of here. I want my $10 or whatever it is, a little over $10. Got two today. GWAC, that's with Cipher Mining. 76% of the shares were redeemed. 76%. What? So you had 87.9% of the votes cast at the meeting, representing about 57% of the outstanding shares as of the record date, voting in favor. Deal's going to close. But it's going to close with a lot less cash than they had because 76% of the SPAC holders said, I want our money back. Tortoise Acquisition 2, SNPR is a symbol there, with Volta Industries. That's an EV charging company. 96% of the votes cast on the business combination proposal at the meeting were in favor of approval. But 70% of the shares redeemed. 70% said, nah, we're out of here. And again, this is having the effect of reducing the minimum cash requirement. Some of them are below that, and then you need the company that's being acquired to waive it, say we're going to be okay dealing with 70% less cash, at least from the trust than we thought. I mean, that gets you to today's latest deal. You see Forbes is announcing it's going to go public through a SPAC, Magnum Opus. They're going to enterprise value of Forbes is going to be $630 million. That's net of tax benefits. But this is what I'm talking about, right? $600 million of gross proceeds, and $200 million is coming from the Magnum Opus trust. That is assuming no redemptions. Well, what if you get 70, 80% redemptions on this? Now, I'm not saying you will, but near close. You're going to end up with a lot less cash. Obviously, you throw the pipe in, and that helps. So this is something we're watching closely. Yesterday, we featured a stock that faced an enormous short squeeze because it had incredibly high redemption, but voted in favor, and the deal closed. Today, there's another one that I'm looking at, BLUW. Take a look at the shares of this. The meeting hasn't happened yet. We don't know whether there's an approved deal or not, but it's going crazy. And
it's the same phenomenon.
I can only assume it was people who are short who are now worried that you're going to get enormous redemptions, but the deal's going to close, but you're going to have reduced the amount of outstanding shares dramatically, hence you're not going to be able to cover and or borrow. That's the only thing I can come up with here, unless there's some other reason I don't know about, which may be the case.
It's a $183 million company, but that's not true, right? It's because after SPAC.
Right. They bring in, it's the share count changes. But in this case, the share count, who knows where it's going to be because you got so many people. I don't know what the redemption is going to be. We don't even know.
How do you vote in favor of something and then tender against?
Well, you know what? That happens in risk arb, where you get a record date. You get risk arbs who vote in favor of the deal, who own the shares by the record date, but then sell prior to the close.
Right. That's
so
exactly
it does
right.
happen.